All right, welcome back. All things mortgage related. Joshua here, and let's talk about debt to income ratio. Big question homeowners have is how much can I afford? And again, a big part of that comes down to debt to income ratio. Assuming you have qualifying income, qualifying credit scores, and you have enough assets to meet whatever down payment and closing costs you have, the question of how much you can borrow has to do really with how much additional debt can you take on and still meet the requirements for the program. Now, as you've heard me say in all these videos, we're talking generalities here because different programs, different borrower profiles will have different max limits. It's not black and white. You can look at a written guideline for a certain program and it'll give you like maybe a max debt ratio of 43%. But all these programs says unless otherwise determined by the automated system. So if you have particularly low credit scores, you may not get approved at a 43%. If you have great credit scores or big down payments or all kinds of different what we call qualifying factors, you might see you get approved for a 50 or 51% debt ratio on a conventional program. You might see 55% on FHA. And with VA, with the way they look at income and residual income, I've actually had veterans get approved at a 65% debt ratio. Okay, so let's talk now that we kind of know that that's a key number. What is debt ratio? Well, really, what debt ratio means is what's the ratio of the debt that we're going to use based on the application as it relates to the qualifying income on the application. So if you're not on the loan, but you're living in the house, well, your income doesn't matter because it's not on the application. But also, your debt doesn't matter because if you're not on the application, your debt's not there. So it's that ratio between your income and your debt. Now, the ratio has two qualifying ratios, and you have to consider both of them. One of them is called the front end ratio or the house ratio. So this is what is the loan you want to get? What is the payment, total monthly payments, the principal, the interest, the taxes, homeowners insurance, if you have HOAs or flood insurance, whatever it is, what's the total monthly cost for that as a percentage of your income? That's the front ratio. The back ratio is taking that same payment, but now you're going to add to it the required monthly debt obligations that are on the applications. So this would go back to your car loans, student loans, credit cards, those types of loans you see typically on your credit report, or if you pay child support or spousal support. These are obligations that you have. You have an agreement. It's written down. You got to pay these back. What's the monthly obligations for those? We do not take into account your utility bills, your cell phone bills, your cable bills. Okay, we don't look at that. We look at the consumer debt in which you have an obligation to have until it's paid back. You add all those up, again, monthly payment, you add that up. What is that as a percentage of your income? So that's the front and that's the back. So let's just say the program that you're looking at would approve you for a 55% back end ratio. Okay, so let's say that's like FHA. Well, just because it will approve you a 55% debt ratio, if you have zero debt and all you have is your mortgage, the house you want to get, it's not going to let you have a house payment that's 55% of your income. That might limit you to like 48% or 44% or lower, again, just depending. So these are the different ratios that the lender is looking at, and that's really what's going to determine how much you can afford. So once I have a client and we've determined based on the application, we got everything dialed in, we've determined what the max additional house payment that they can take on and still qualify. Once I know that number, I then start working backwards. When I estimate the taxes, I estimate homeowners insurance because I won't know these things until you actually find a home. We estimate the interest rates, those change daily. We estimate that, and based on those estimations, we kind of go backwards and say, okay, based on that, your payment has to stay below X. So I estimate that the house price might be Y. So let's just say that's $400,000. And that's how you get to your max qualifying purchase price. But again, that is just an estimate. If you happen to find a property that has particularly low property taxes, well, then you can go higher on that. Because again, it's not the price of the home you're being qualified for, it's the debt, with the assumption, again, that you have enough assets for your down payment and closing costs. So that's why debt to income ratio is very, very important. It's not cut and dry. Again, it's one more reason not to trust any kind of automated system, because there's really a good loan officer is going to be able to help strengthen your file to add things that might be good compensating factors to get that debt ratio up. And then they would be able to explain to you kind of what that means. Because the other big thing is your property type makes a big difference. A manufactured home with a lot of these programs will not allow you to go as high in the debt ratios as a stick built. So you have to know these things. Otherwise, again, you go away thinking you're all set. You find a property. The person you're working with doesn't understand this or doesn't explain it to you very well. Next thing you know, you spent home inspections, appraisals, it goes to underwriting, and your loans declined, and it maybe could have been forestalled. So that's what you need to know about debt ratios. If you've got questions, let me know. This is a great video for you to share if you have anybody you know who's looking at buying a home. Again, know that these are not black and white. You really got to take a look at it. So don't disqualify yourself on it. If you got turned down somewhere else, it doesn't necessarily mean that they were right or the program they were using was best for you. So definitely reach out to somebody who knows. Share this, like it. Until next time, have a great day.